What's going on, guys? Welcome back. It's Amy Nicholas, and talking today on a very violent, tumultuous, up and down stock market day. Some interesting stuff over the weekend caused the overnight markets to act up, which actually meant they were acting down yesterday, and lots of stuff going on in the news that people are like freaking out about. But it's okay. I'm gonna share with you why invest daily into the stock market. And for me, whether a stock or an ETF that I'm invested in or crypto is going up or down, it's good. It's always good. Okay, so a lot of people are like, well, I just bought this stock and it went down and that sucks, right? But if you come from an investing mindset, if you are dollar cost averaging into the market, you're not trying to, get in, get out super fast, you're not day trading, then you just have to realize ebb and flow. People be people, okay? The last thousands of years, people will react. The market will be up, it will be down. So to daily invest in it, you can take advantage of basically people's fears. I don't mean to state that in a way that's a downside to them, but you as an investor, this is opportunity time. So when I see the markets, the big ones, S&P 500, the NASDAQ, the Dow, things all going kind of downward, of course that's going to affect all the other individual stocks to an extent. And I look at it as an opportunity to buy, okay? If you can change your mindset, you can change your life. So if you say, hey, you know what? Last week I bought, Netflix and it was like $980 and now it's worth, I don't even know, $960 or something. You know what? It's on sale, right? You have to have that mentality if you're in this for the long haul, okay? You're not trying to sell it tomorrow. You just have to realize that it takes time. It takes time, right? So for me, I looked at the market this morning. Actually, I was looking at it last night. Robinhood has real-time market data. So when the overnight markets are trading, this is like, some of the European stuff and whatnot, you can see kind of what the forecast might be for Monday morning. And to me, it looked down. And I was like, okay, so my strategy coming in on Monday was like, let's see what's on sale. Let's see what's going down. Surprisingly, the S&P 500, it really recovered. I think it was a moment where it had dropped quite a bit. It really recovered and started to come back up. But for my purposes, something that's worked well for me, because I'm investing in a lot of ETFs, stocks that cost hundreds of dollars, right? Like Facebook is one of my investments, and you're talking freaking, what is it, 800 something. Let me pull up Robinhood here. Where are we at? Facebook. Yeah, it's like, 651. I'm thinking of something else. Netflix. I was thinking of Netflix. $650 stock, right? What I've found to be most beneficial for my own peace of mind is to not come out the gate buying whole shares of stocks, because it's up and down, right? If you put in all your money and, $651 for a single share is money, right? What I've been doing is daily buying fractional shares. So I will come in and, today, not so much on Facebook because I actually was going up. Good news on Facebook's end. But for example, I saw Amazon down this morning at 224, and it had previously, I think, closed around 234, 236 on Friday. And I was like, oh, time to buy. So I put in an order. I think I put in like $10 worth or something. It was very minimal. But within 30 minutes, it had jumped $10 a share. And it just makes you feel better, I think, when you're buying little bits of these high price stocks. I say high price, it's just, these dollar costs are kind of high in the sense of you're only getting one share, right, for $230 But if you spread it out and you buy daily and you buy a little bit every day, you're going to end up mostly, okay, I'm not saying all stocks go this way, but mostly on the green. And again, may take time, and we're talking months, could be years, freaking some stocks is like a decade. I'm not interested in holding that long. But at any rate, we're here for the long haul on the investment side. And so one of the things I've been doing is an $8 a day daily investment into two ETFs, VGT and VOO. Both of these are high price, $500-$600 a share. So I'm just buying $8 of each every day. And you're basically what ends up happening is you're buying at these different points of the stock price. So like today, in my rollover IRA, I was like, you know what? I'm going to buy some extra VGT and I'm going to buy some extra VOO. This is like not part of the challenge, but I just decided, hey, stock up. Like there's times where I'm buying a flat amount per day and there's times where I'm doubling down, right? So today, in some cases, it was a double down day. It just made more sense to capture these low price moves. For example, VGT, okay, so I still do my $8 a day. That's in a separate account, consistently buying $8 a day. But in another account, I've got VGT, and I was like looking at what I had paid for this in the past, and I was like, oh, anywhere from $650, price point, all the way down to, I think the lowest I saw was like $607, and today it got all the way down to like $605, $603 or something. So I was buying, like $100, $200 worth. I wasn't buying the whole share because I really just didn't feel like buying $600 worth of it, but I'm buying a little bit at a time, and I do this consistently so that over time, I'm getting it at all these different price points, and I'm not freaking out because, oh, I bought the stock at the wrong time. And in the past, I've done some swing trading. I've kind of put that on the back burner at the moment. In a bull market, to me, it was easier to do swing trading where you're buying something or holding it for a few days to a couple of weeks. And, the market was more predictable at that point, so it worked. I was able to make profits. And then the market got kind of, wonky, and it's been up, it's been down. And the swing trades were, some of them I got stuck in where I bought way at the top, and I'm like, shoot, I shouldn't have bought so many shares and got, stuck with these. So at any rate, I just found it better for me personally to buy into the market in dollar amounts. It's just what I really like to do. And some platforms that make this really easy. The two main ones I've been using is Fidelity and Robinhood. And I love Robinhood because I can set up automatic, daily, recurring purchases. So if I want to buy $15 of Netflix every day, boom, it does it. If I want to buy $5 of Bitcoin every day, boom, it does it. It's all scheduled. It's very easy to set up. I just find that app super simple and easy to do. Fidelity, their minimum recurring is weekly, and instead of trying to pick the right day of the week or something, I was like, you know what, I'll just go in there manually on that one. So that's where I've got my $8 a day challenge. I just manually go and buy it. So that's where I started that challenge. So at any rate, give you a quick update where I'm at, because it was different on Friday where I was at with my $8 challenge. I'm actually going to pull it up here on the computer screen. I'm just kind of flipping windows here. Okay, so yeah, because the market went down today, Amy's total gains, I'm still green on VOO. I'm up $1.25, but I'm now negative $4.60 on VGT, which is the ETF that tracks the NASDAQ 100 tech stocks. And because tech took a massive beating today, especially NVIDIA, I'm just going to put it out there. If you guys love NVIDIA, might be a good time to buy because it is down today. They got some news about a Chinese company that has developed an AI called DeepSeek, and it's supposed to be able to use like less process power than what the high-end chips like NVIDIA produces. So it's bad news for them. They've actually just dipped into the 117s right now. They were trading on Friday at 146. Holy cow. So they're down 17.5% almost. So it's a huge drop for a stock that's only 100 something a share. So I think that if you're a big fan of NVIDIA, go for it. Jump in while it's beaten down. But me personally, when I looked at the charts and I try to do some technical analysis when I consider buying things for the long term, I did not like Nvidia's charts. They were struggling to hold any kind of gains that they would get. It would bounce at every level where it had gotten to a support or something. It would just drop again. I was actually really surprised it even got into the 140s last week. I think the market was just like woohoo, like Trump and everything. But yeah, I knew kind of in the back of my mind it wasn't going to hold. So yeah, but if you're a long term person, you see that company sticking around for the long haul, then by all means go for it. Me personally, didn't like it. I realized though it does have a significant holding inside of VGT. In fact, I'll share. Let's see. Let's ask AI, ChatGPT, what we have inside of. Okay, chat. I'm not even logged in. Okay, we're going back to Google. Let's see how much BDA inside VGT. Okay, so yeah, it's 15% holdings inside VGT, which is the ETF that tracks the NASDAQ 100. 15% is NVIDIA. So that is why that one has just taken a massive drop, and VGT dropped like, freaking $40 or something. So that's why. But it's all good. We buy low, we buy high. In the end, it's just about being consistent, being in the market. Me personally, I found it better to put my money to work than to try to hold it and save it and get next to nothing interest wise. Your money doesn't grow. Like it's not, you're not going to become financially independent keeping your money in a savings account. And me personally, if the money is just too accessible, like not in the stock market, it's more likely going to get spent, and that does not serve me. So, anyways, guys, just wanted to share, why it's always a good time. It's always a good time to buy. You can think about it, I'm buying low and I'm buying high. I'm not stressed out about trying to time into the market, like buy now, it's at X price. Just being consistent. You'll look back in, 6 months, a year, 2 years, whatever it takes for the market to, continue on its upward track. And especially these ETFs, the track the NASDAQ, the track S&P 500. Over time, consistently, have always gone up. It's just a matter of being patient and being consistent. I've shared this story before. I'm going to share it real quick again. That a couple of years ago, when it was 2022, and we were in a bear market, it was rough, right? Like you'd put money in immediately, your money's worth less. Everything was down every day, down. And I was investing in the S&P 500 through IVW, I think at the time. I no longer recommend that ETF because they have high expenses, fees and whatever. But anyways, the price per share was just dropping every time I put money in. And I looked back at all the different prices I had bought it because I was dollar cost averaging. And, I bought it anywhere from like $68 down to like 40 some dollars. And the stock just seemed like it was going to keep going down. But, I told myself it's going to come around. It always comes around. It always goes back up. Might not be tomorrow. Might not be in 3 months, 6 months. But it will turn around. And sure enough, this past year, 2024, my shares were worth almost double. I think I sold out at like $92 a share, $94 a share, something like that. Basically some of my shares were doubled in value. So my only regret was not putting in more and being a little bit more consistent than I was, but it's all good. I just want to share that story because, it can be disheartening to see your money just immediately evaporate, right, when you put it in the market. But give it time, okay? Time. We are time in the market, not trying to time the market, all right? So leave a like, put a comment, feel free to ask questions, and I'll see you on the next one.